My name is Jared Meyer, and I work for NinjaTrader in our Denver office. We have a very special event for everyone in attendance with Manesh Patel of IchimokuTrade. I do want to mention that it is important to understand there are substantial risks in trading commodities, futures, contracts, as well as Forex. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker. You could even incur losses beyond these amounts. Please inquire at ninjatraderecosystem.com/risk disclosure for more information or for a copy of the CFTC full risk disclosure. Please do remember that these training webinars are not a solicitation or recommendation, but simply educational in nature. I want to let everyone know that this presentation is brought to you by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading platform. Any brokerage-related questions should be directed to our NinjaTrader brokerage directly at 312-262-1289 or by emailing brokerage-sales@ninjatrader.com. For those of you that would like information there, I'm going to post that in the room right now. We are very excited for this unique event in which Manesh Patel discusses the proprietary iMTF technology and trading with multiple time frame analysis at one glance. Thanks again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room Manesh Patel. Please take it away, Manesh.
Okay, Jared, can you hear me okay?
Yep, we can hear you.
Okay, perfectly. So I want to welcome everyone today. Thank you for taking the time out of your busy life to attend this workshop. I want to thank NinjaTrader for setting up the workshop, and I hope everyone enjoys trading this year in this volatile market that we've seen so far. It definitely is a trader's market when you have to be extremely picky in trying to find your trade. As you can see from the title, today's workshop is dealing with multiple time frame analysis at one glance. Today, a lot of traders still look at one time frame. Some look at 2 or 3, but that's about it. The reason why most traders shy away from multiple time frame analysis is because it's very confusing. Sometimes the higher time frames influence the lower, and sometimes the lower influence the higher. So also, what time frames are the key? Some people look at 10, 30, 3 minutes, and so forth. Today, we're going to take the mystery away. We're going to do multiple time frame analysis where we're going to look at all the time frames from 1 minute all the way up the monthly time frame within seconds. We'll do this within our AI technology called iMTF. It stands for Ichimoku Multiple Time Frame Analysis. With this technology, a trader can easily see the multiple time frame support resistances plus much more. It's going to be a complete trader's workshop. We're going to show you 2 different perspectives today. One is using the iMTF AI technology to trade and find opportunities within itself. The second perspective we're going to be using is using the iMTF technology to optimize your existing system. Okay. Now, we only have a short amount of time for this webinar, so we're going to pretty much leave all the Q&A to the end of the workshop. If you guys do have any more questions later on, here's the link that you guys can use and email us for Q&A. Okay. So I'm going to quickly go through a lot of this presentation, go for everything. We have complete trading plans and everything, and then we have a lot of charts to pretty much show you exactly how to use the technology and so forth. And then towards the end, I'll send you a tutorial too. Okay. Before we begin, let's go for our disclosure agreement. This agreement states that this workshop is for education use only. We're not soliciting to buy or sell any particular instrument. If you do so, you're doing it at your own risk. All information is owned by EII Capital Group. It cannot be copied or distributed without our written permission. We are also broker charting neutral. Today we're going to pretty much talk and illustrate everything with NinjaTrader. A little about my background. Here's the information about me. You can find everything about me on the internet because we publish it so people can validate us and see the career path I've taken. So I'm not really going to go for this. Everyone could kind of see it. We are, we do have our certifications with the MTA, CMT, and so forth. You guys could look me up on LinkedIn, so I'm not really going to go for my background at all because it's kind of irrelevant. You kind of need to see the iMTF technology and see it within its working. So, what exactly are we going to talk about today? As we mentioned, we're going to simplify multiple time frame analysis in the form of technology called iMTF. iMTF technology looks at what day traders do, swing traders, and long-term traders are thinking and illustrates everything in a visual pattern and picture. From a high level, if you think about what multiple time frame analysis is, it is basically a timing element. We always hear about people talking about price, but today we're going to talk about both price and time. Believe it or not, when price and time are combined together, this gives a trader the highest probabilities. Why? Timing is very critical if you think about it. If you're trading when a trend occurs, you have the highest probability of success compared to when a consolidation pattern occurs. When all the time frames are aligned, that tells you you have a timing element that's occurring, and it increases your probability of success. And that's what we're going to show you today. Talking about multiple time frame analysis is irrelevant if we don't talk about the real trading that people face today. This is a trader's workshop. As a result, we're going to show you how to use the iMTF technology in respect to all the trading blocks that you're about to see. You will know where to enter, where to exit. You'll know everything in regards to pullbacks, breakout, entries, and so forth. We'll talk about key support resistance levels. We'll talk about breakouts. We'll talk about targets, profits, money management, and so forth. As you can see, we're going to cover a lot in this workshop. I want to make sure everyone leaves this workshop. We have a complete trading plan that you could test on any chart and any instrument out there. Okay? The first place we're going to use the iMTF technology is in finding key support resistance levels. Why? Well, if you think about trading, trading is all about recognizing key support resistance levels and placing trades close to these levels. The closer your entry to these key levels, the lower the risk and the higher the reward risk. The sole purpose of thousands of indicators that exist today is to find these levels. The problem in that statement is key. How do you know when a key support resistance level is major? Most people look at one time frame for with an indicator or a couple of indicators to sit there and find the key support resistance levels. You find those levels and then you basically trade the probabilities. Some people use 2 or 3 time frames, but most people only use 1. Today we're going to change your thought process as a trader with iMTF technology. So let's look at issues traders face in finding these support resistance levels. Most people look at one time frame. Today we're going to look at everything from 1 minute to 1 month in a matter of seconds and see exactly where those key support resistance levels are. If you think about it, trading is all about recognizing key support resistance levels. Okay, we've gone through this. The sole purpose of the indicator that we're going to talk about today is to find the key support resistance levels in a matter of seconds. Okay, in theory, there's 3 types of traders that exist in the market today. The first type of trader that we're going to discuss is the day trader. They enter positions and want to exit the positions before the market closes. They are represented in the lower time frames. In the iMTF technology, we're going to classify the day traders in 3 different types of categories. The first zone is what we call the lower time frame, which is scalping, day trading, and so forth. So it's basically 1 minute, 2 minutes, 3 minutes, all the way up to 5 minutes. Okay, this also includes tick charts. The second zone that we're going to talk about is this middle zone here, which is 6 minutes, 7 minutes, 8 minutes, 9 minutes, and 10 minutes. The third zone we're going to talk about is going to be the 12 minutes all the way to 50 minutes. So if you look at these day traders, you have 3 different zones here, and we're going to analyze everything in the IM technology from 1 minute up to 50 minutes. The goal of the AI technology engine is to analyze all these time frames and find when all these time frames have the same support resistance levels. When it does, the iMTF technology will tell you. Not only do we look at the day traders, we're also going to look at the second type of traders out there in the market, which are called the swing traders. They include the 60 minutes, 120, and the 240-minute time frame. Okay? So the goal of the AI technology is to analyze every one of these swing time frames and to find when the 60, 120, and 240 are matching and give you the same support resistance levels. And once it does, it throws it into this bucket called the support resistance bucket. The third type of traders we're going to analyze are the long-term traders. It includes the daily, weekly, monthly. So we're going to analyze these time frames and find when the daily, weekly, monthly are thinking the same way. Okay? So if you look at the complete solution, and the complete picture for the iMTF technology, we're going to create one bucket in theory that finds all the matches between the day traders, swing traders, and the long-term traders. When we find that, the best way to find the support resistance levels. Why? The problem is no one knows when the day traders, swing traders, and long-term traders are going to come with volume. So we never know when one of these types of traders are going to influence the instrument at all. Therefore, we need to sit there and analyze all three types of traders and determine when they're all thinking the same way. When they're all thinking the same way, then we know that that's a major support resistance level. Okay? Now that you know the iMTF technology and how it works from the high level, now what we're going to do is we're going to show you how we represent it easily in the charts. Reason why is trading is visual, so all the calculations need to be visual so you can easily see things and analyze them within seconds. When a day trader and swing traders are matching, we're going to represent it through a purple dot. Okay? So basically this is when you have a purple dot here that tells you the day traders and swing traders are thinking the same way, and wherever that purple dot is, that's the major support resistance levels on where they're thinking the same way. When the swing traders and long-term traders are thinking the same way, we're going to represent it through a black cross. Okay? So we basically represent everything here through either purple dots or black crosses. Why did we separate the two groups? Well, not all the traders are the same way. Some traders are conservative, some are aggressive. This is why we did that. And we'll explain this approach in just a couple of minutes with probabilities. Let's say you're a day trader. What are the probabilities when you face as a day trader? If you have a purple dot on the current bar, that gives you an average probability. Okay? As you can see here. If you have a black cross on the current bar, that gives you a higher probability compared to a dot. Why? Because you're trading with the higher time frames. If you have a purple and a cross on the same bar, it could be a little off from each other too, but in theory, if you have a purple dot and a cross on the same bar, that's telling you that every type of trader, all three types of traders, are thinking the same way for the support resistance level. Wherever that purple dot and cross are, that is the major support resistance level that you're having, and that is the highest probability that you're going to get. Okay? Now let's look at it from a swing trader perspective and what are the probabilities. If you're a swing trader and you have only a purple dot at the current bar, that means basically you have a low probability. If you have a swing trader and you have a cross at the current bar, that gives you average probability of success. If you're a swing trader and you have a dot and cross, that gives you the highest probability of success. Reason why is you have all three types of traders thinking the same way. So these are the two different perspectives that we've given you as a day trader and swing traders, depending on whether you got the dots and crosses and so forth. So let's look at the strategy. Now we discussed the iMTF support resistance. Let's begin the discussion on when we look at when to place the orders. In other words, let's look at the strategy behind the iMTF technology and how to make it successful. The strategy we're going to discuss is a trend-based strategy. Why? It gives you the best reward-risk ratio. If you're an elite wave trader, this is basically the institutional wave 3. Okay? Here's the iMTF technology that we've created. We represent a bullish strategy zone when we give you a green shaded area. The shaded area will stay shaded green as long as the setup is valid. Okay. The number 2 point here is the blue dots. The blue dots basically appear in the shaded area, and this is your breakout level. So this tells you exactly where the breakout entry would be once the shaded area occurs. Point number 3 basically is the green dots, which represent the trailing stop. This shows the setup zone and also outside the zone. Why? In the setup zone, it tells you the initial stop. Once you enter the trade, it tells you exactly where your trailing stop should be. Oops. And point number 4 is you don't see it yet, but you will come back to it in a minute. But the purple dots are basically where your pullback levels will be. So you're looking for purple dots or crosses in the shaded area for your pullback. Okay. Notice the shaded area disappears when price breaks out. Okay. In situations, the breakout entry was triggered. The other scenario is the shaded area will disappear if the setup becomes non-valid. So the shaded area basically disappears once you enter a breakout trade or if the trade got canceled where it got to the green dots. Here's an example of a bearish setup. It's represented by light shaded red background. And of these colors you can change for the input parameters. Number 2 shows basically the breakout dots were for the breakout entry. The 3 point shows you the trailing stop and initial stop, okay, and so forth. Here, in the last 2 examples, we showed you an ideal setup. Let's go for a bad setup that you should be avoiding. In this example, we have a bearish setup here. The reason why it's bearish is because you have a red shaded area. However, notice the purple dots are acting as a support. Okay, this is not good for a bearish setup. For a bearish setup, you need the purple dots, which are multiple time frame support resistances, to act as resistances. If they act as supports, this is not a good setup at all. So you need to avoid them. Okay, here's another bad setup here. Look at the location of the green dots. Let me show that to you. Right here. Okay. Notice the location of the green dots, which are trailing stops, and the black crosses. Okay. Here you have a bearish setup, which have the black crosses are above the stops. If you put this bearish setup on, price will get to the trailing stop, get you stopped out, then it goes to the black crosses, which is a resistance, and bounces off there. This is not a good situation at all. The green trailing dots need to be above the black crosses for a bearish setup. And this is a perfect example of a bad setup that you want to avoid. For a bullish setup, you need the green trailing dots need to be below black crosses and dots in order for it to be a good setup. So basically, we've gone for 2 different setups that are not good at all. Okay, this is not a bad example. It's an example of a consolidation pattern. Notice the shaded areas close to each other. Okay, notice price never got to the blue dots except on the last shaded area. This is a perfect way where you could sit there and watch consolidation patterns and trade them for breakouts. You have the shaded areas that occur within a short amount of time, but none of them actually, price never got to the blue breakout dots at all. When it did get to the breakout dots, it did trigger the trend to occur. Let's look at some charts and see exactly how all this stuff works together. Here's a daily chart of the VIX, the volatility index. It has an inverse relationship with the stock market. If the VIX goes up, the market goes down. If the VIX goes down, the market goes up. This snapshot was taken just recently, and what I want you to do is focus on the green shaded area that we have. So this is a chart of the volatility index on the daily time frame for this year, and you could see here that this is the current year. Okay? Notice, let's look at the chart. Notice all the red shaded areas where price never got to the blue breakout dots at all. All of a sudden, back here in January here, you got a green shaded area after a long time. The green shaded area, then it gets to the breakout dots. This was late 2018. This was just a couple of months ago. This was indicating that the market has topped out due to the volatility coming into it. Look what happened after that. The markets went down and we still yet to recover from it. This was a very good early indicator of the stock markets topping out and where they were hitting a top and there was a possibility of a major pullback occur. Let's look at the zoomed in chart of the instrument, okay, of the shaded area. Here's a couple of green bullish setups here. There are a couple of green bullish setups. This is basically a stock on a daily time frame for a stock called 5. There are a couple of green bullish setups. The first two never triggered the blue dots at all, so the trade was canceled. The third green bullish setup triggered the blue dots, and it basically started a nice trend going up. The fourth and the last bullish setup just got triggered recently. Notice it triggered into the trade and just pulled back afterwards. The black crosses held and it broke out again. The black crosses going up represent multiple time frame supports going up. This is very, very powerful. Most people look at supports to go up on a single time frame. This is a multiple time frame supports going up, which supports the bullish trend going up. And that's a key thing to note. Here's a daily chart of the volatility index again. This is this is not the volatility index, sorry. This is a chart of the Australian USD currency on a 30-minute chart. Notice the green shaded area here, okay? It hit the blue dots, and then basically it got entered into a breakout trade, and as the trend keep on going up, it experienced the pullback. When it experienced the pullback, notice the black crosses appeared and they were above the last black crosses. This basically supported Australian USD on the pullback to keep on going up. Reason why is the multiple time frame supports on the higher time frames kept on going up. Okay? Let's continue. Here's a chart of the crude oil on a 60-minute back in April. This is a green bullish setup here. You have an option for a breakout trade, which is at the blue dots, or you could do a pullback at the black crosses since they appeared in a shaded area. The pullback triggered here, and since this was a pullback, we're looking for a 3-to-1 reward risk ratio to the pivot high, which is a bullish setup. Okay, this went and retested the pivot high. It got to the 3-to-1 reward risk ratio. And you could see that the initial stop kept on moving up, 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 and so forth. Here's an example of WBA stock on a 60-minute. The first red shaded area here did not trigger. The second red shaded area triggered the breakout and started a trend. It even had a cross in the shaded area, which increased the probability of success. After the breakout, it trended nicely to the next major support, which is roughly around there. On the third was a bullish setup, which never triggered. Okay, notice it had the multiple time frame supports in there, but it never got to the breakout level at all. Once the trade got canceled on the bullish green setup, a red shaded area appeared. Okay. Here's an example of CI stock on a weekly time frame. Notice the bullish breakout triggered here and started a major trend. The key things to note is what's going on now. The price has gone down drastically and stopped here. Okay, and let me show you here. If you look at the past, you'll see some crosses in the past of where it stopped, which is right about here. This is key because there's a multiple time frame support that's holding this up. Later you'll see a chart where we're going to use a Fibonacci level that matches to these multiple time frame levels that we're showing you with these crosses. It's also resistance that started a major trend. If you look back here, this was a major resistance right there, which is exactly where it stopped here. And when it broke that major resistance here, it started a trend. Now we're going to show you some key market events and show you how the breakout levels in the shaded area did in those events. Okay, these are events that have occurred in history which has drastically affected a lot of people. Here's a chart of the S&P 500 focusing on 2003 to late 2008. Okay, in 2003 we had a red shaded area, and it never triggered the breakout at all for the S&P 500. In 2005, the breakout green shaded area triggered and started a long-term trend which retested the pivot high. Notice the long-term bullish trend got stopped out for a profit at the green dots later on, close to end of 2007. So this is a major event that occurred where basically after everything that happened, you could see that the S&P 500 finally triggered a bullish signal breakout for a long-term basis, basically in late 2005. Here's another chart of the XLK, which is technology sector in 2009. Take a key note of this chart here. Okay. The reason why is financials took the markets down in 2009, but technology let us out, and that's what's leading us today. In 2009, the bear setup occurred, but the breakout dots never got triggered. In 2011, the bullish breakout got triggered. So remember this, because we're about to show you the financial sector in just a moment. But remember that the bear setup here never got triggered at all, and the bullish setup here on the technology sector got triggered in 2011. And if you compare it now to the financial sector here on a monthly time frame, you'll notice a big difference. Here is a chart of the financial ETF. Notice one thing. In late 2008, the bear setup did get triggered, whereas the technology sector never did. So this showed you that the financial sector was basically going to sit there and lead the market going down, where compared to the technology sector. Notice the green shaded area here occurred in late 2014. The technology sector basically broke out in 2011. 3 years later is when the financial sector broke out. So you could easily see just by doing sector analysis of technology sector versus financial sector that the technology sector let us out of the market in 2011. And this is just doing basic sector analysis. Here's a chart of Apple on a daily time frame. Sure, you guys have seen this. Okay, in December 2016, you had a bear setup that never triggered. And afterwards, in January 2017, a bullish setup triggered, and look, basically you could see the big move of Apple when it basically went from $105 all the way to $155. Here's crude oil. A lot of people remember crude oil when it was around $120 a barrel and they saw a tank. This is a major event that influenced a lot of people. You could see here on the weekly time frame back in 2014, you had a bear setup here that got triggered, and you could see it went from $110 a barrel all the way going down, 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 all the way to $45 a barrel. Here, attaches a 1-minute chart of the E-mini S&P 500 futures of July 27. This is basically the bullish setup here triggered, but notice you had a multiple time frame purple dot resistance above you, so you never would have taken this bullish setup due to limited reward. Later on, a bear setup triggered, and you could see that triggered here, and you could see easily going down. So this shows you the iMTF technology could easily be used on 1-minute time frame. Okay. Now that we discussed everything in orders for orders from entry to trailing stops and so forth, we're going to show you exactly how you could use the iMTF technology for targets, or what we call preserve mode. Preserve mode is the same thing as targets, except that you're only going to liquidate 50 to 75% of your positions and keep the rest on. Okay. This is very powerful because a lot of people do not see multiple time frame support resistances in the past. With the iMTF technology, you could easily see it. And let me give you an example here. This is US yen spot currency here. And you could see here this chart is going down. Here. You can see the chart's going down, 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 and all of a sudden it stops. If you look in the past, you'll see these crosses here. Notice price never got there, but these multiple time frame supports were established in the past. And notice how it influenced price on the bearish trend here that it triggered and stopped it dead in its track here and made it hesitate here. So these are multiple time frame support levels that a lot of people do not see, but with the iMTF technology you could easily see those levels and how it influences you in the current trend today. Here's another example of McDonald's daily chart. You could see here that the chart was basically going bullish. It triggered a bullish setup here. You could see that all the hesitation here that occurred. And all that hesitation occurred due to these multiple time frame crosses here that occurred. Notice price never got to those multiple time frame levels when the crosses appeared, but later on it did influence you completely. Here's a chart of MDLZ on a weekly time frame. And you can see the multiple time frame supports start now being established. You had a setup, price went down, then it started hesitating, and notice the crosses. Now you have 2 weeks in a row where the crosses were support. That's basically stopping this chart from going down. A lot of people that use harmonics will see that this is a harmonic pattern here, and the crosses basically were supporting you to go up. One of the greatest advantages of technology is its ability to be used with other technical and fundamental systems. So you could use it by itself, or you could use it in conjunction with your existing system. Okay, we're now going to show you very quickly on how you could use the iMTF technology to optimize your existing system, whether you're a Fibonacci trader, Elliott wave trader, Bollinger Bands, moving averages, harmonic patterns, candlesticks. It does not matter. You could use it as an extra confirmation on top of everything you're doing. Here's an example of a stock AEP on a 4-hour time frame. Okay, and you can see that this basically we've drawn the Fibonacci levels for you, and you can see here from the Fibonacci levels here, let me show you the pointer, the trend started here, went all the way down here, and if you draw the Fibonacci levels, this is your 50% level here, and there's your 61.8% level here. Notice when you got to the 50% level here, you never had crosses at the current bar. You never had a multiple time frame resistance at all to stop it. As a result, it moved up to the 61.8. When you got to the 61.8, you never had anything there at all. And that's one of the reasons why it hesitated and eventually just sat there and consolidated around that level. That's one of the reasons why those levels did not hold. Here is AEP on the 60-minute with Fibonacci. Notice on this time what happened is that you had a trend that started from here, went all the way up here, there's your 50%, and there's your 61.8. Notice at the 50% level here, you have crosses. This is a multiple time frame support here. That's one of the reasons why this held here. So you had a green shaded area here, then you had crosses here. So this was one of the highest probability trade setups you could get with the iMTF technology. Is reason why is you had the crosses here on a 60-minute time frame in a shaded area, which basically if you sat there and you took it here, the entry will be here, your initial stop would be the green dots, and your target or preserve mode will be this pivot high here, which will give you a 3-to-1 reward risk ratio. And you can see how easily it sat there and did that trade. Okay, but the iMTF technology was confirming the levels there. This is a CI trade we just talked about just a minute ago with the iMTF technology. Notice the upward trend that it moved. Okay, and if you look at the Fibonacci levels here, you show from here to here, and if you notice, it stopped right at the 61.8. Initially, there was no black crosses at all. Okay, then later on, look what happened. The black crosses came in and held that 61.8% retracement, and that's one of the reasons why it's holding at this level here. Okay, now a lot of people Fibonacci would be like wondering, where do you start this from? In here, you could see from here to here, it's that 61.8%. Some people will draw from here to here and so forth. So no matter where you draw the Fibonacci levels, what you're doing is you're looking for a confirmation of the iMTF levels at those Fibonacci's to confirm it. Some people use Hakinashi in the trading world. This is a 3-minute chart of gold futures with Hakinashi. And what you can do is combine Hakinashi here. And you could see when it hits the blue breakout dots here, you look at the Hakinashi candle. If the Hakinashi candle had a tail at the top end, that basically tells you that's not a trend at all. So you could use that as a confirmation on the breakout trade to sit there and trade Hakinashi candles going down. Harmonics. My good friend Scott Carney does harmonics on NinjaTrader. And you could see here, this is one of his harmonic patterns here. So on the harmonic patterns here that Scott talks about here, you could see that basically you have the harmonic pattern being completed here. Now what you're doing is you're looking for a confirmation that it is going to reverse. So in this scenario here, you're going to look for purple dots or crosses to basically act as support. And you could see here, eventually you had this scenario here. You would not take these blue supports here because the green dots are above you. You don't want that at all. You want the purple dots to be below price, and you need the green dots to be below price. In this scenario here, when this occurred right there, that was the confirmation with the iMTF indicator that basically this was now ready to sit there and reverse right after the harmonic pattern. So this was a confirmation after the harmonic pattern. Here's one with Bollinger Bands. A lot of people use Bollinger Bands to sit there, trend trade, or even sit there and trade consolidation patterns. What you could do is you could wait for it to get to this 2 standard deviations, 3 standard deviation mark, and look for crosses or dots to sit there and confirm that it is about the reverse. If you don't have crosses or dots, then you could say it's about to sit there and trend. Here's a perfect example here where you got to the 2 standard deviation of the lower Bollinger Bands, and when you did, notice there's a multiple time frame crosses above you. So in that scenario, you would not trade it from the bottom of the lower band to the top at all because you have a multiple time frame resistance level. In fact, what you'll do is you wait for it to get to those crosses there, and at that point you could look at sit there and saying, okay, once it gets to the middle of the Bollinger Bands, I could sit there and short it right there, and you could sit there and play a trend going downwards, and that's exactly what we did here. And you could see here on the bottom part here, same scenario here, went to the top here. It had multiple time frame supports here in the lower band here, which basically supported the trend going up. In this scenario here, you had the crosses in the middle of the band here, which is a perfect alignment there, which basically supported this going up. So you could see, look for these multiple time frame crosses to be at any of the Bollinger Bands, or whether it be 2 or 3, and you could sit there and incorporate into your trading plan easily. Some people like moving averages. Here's an example of moving averages here where we have the 50 and the 200-day moving average here. The red represents 50, the blue represents the 200-day moving average here. And most people, what they do is they say, okay, when the 50 crosses above the 200, that's a bullish signal. So what you do is you combine that with the iMTF technology. Once it crosses, you're looking for a green shaded area, and you're looking for the crosses and supports to be below you. And that's exactly what you're looking for. So you look in this scenario here, even though these crosses occurred, there's a breakout level here that occurred, and that basically confirmed everything going up. Notice this is bearish area here. You would never take this bearish area here because you had the red above the blue and so forth. So you could use it to confirm moving average crossover systems too very easily. Okay. Now we're getting to a point where we're wrapping up. So let me kind of show you the trading plans here. This is the basic trading plan for breakout trades. Okay, and I'll quickly go for this. So this is using the system by itself or combining it with any other system that you have. You wait for a green or red shaded area to occur. Then you confirm with your technical system if you want. Okay, if you're a breakout trader, you're going to put your entry at the blue dots. Your conditional stop will be at the green dots. Then you apply any optimization with your existing system, wherever you, if you have it or not. You could use Ichimoku, you could use Fibonacci, you could use Elliott wave, you could use moving averages, whatever you like. You put your cancel alert at the conditional stop, which is basically the green dots. And then you evaluate the reward risk because you always want to incorporate money management. And then basically you also want to verify your entries and conditional stops, which are basically at the blue dots, and the green dots are not sitting on existing support resistance. And that is it, okay, for breakout trades. So this is your basic trading plan for breakouts. Your pullbacks is very something similar to it. Steps 1 and 2 are the same thing. Steps 3 on the pullback, since you're doing a pullback instead of a breakout, you're looking for iMTF dots or crosses to occur in a shaded area. When they do, you could sit there and do pullback trades. Okay. Your stop is always going to be those conditional, those green dots, which is your conditional stop. Point number 3 is you apply your technical system here for optimization and basically evaluate the reward risk ratio and so forth. So almost both the trading plans are very, very similar. What you're looking for is a shaded area to occur, and then basically if you're doing a breakout, you're going to basically use the blue dots. If you're doing a pullback, you have to have a cross or dot in the shaded area to basically do a pullback trade. That's a very, very simple trading plan if you think about it. And basically what you're doing, you're taking advantage of the iMTF technology doing multiple time frame support resistance levels. Okay. Now, Jared, how much time do we have?
Probably about 5 more minutes.
So I'm giving you guys a link here. This is to our new website. We just created some new tutorials here. I know we went through everything very fast, but this tutorial, this is an online tutorial with a lot of 5-minute videos. If you go to this website here, I just posted it in there called imtftrade.com/courses and so forth. Register for free, and it'll literally walk you through step by step everything that we went through on setups, on entries, stops, everything in great detail for you, and you could go through all that tutorial there for the indicator that gives you the shaded area, the crosses, and the dots. Okay. As I mentioned earlier, for Q&A, I know we haven't had a chance to go through and answer all the questions and so forth that you guys have had. You guys are more than welcome to sit there and email us at info@eiicapital.com. We did post that earlier, and I'll post it again here. Whoops, without the slash. Okay. So you guys could sit there and email us there. If you have questions on some charts, we could do that. One of the greatest things that we do is that when a lot of traders lose, they don't know why. With the iMTF technology, you could actually figure out why you did lose in a lot of scenarios, and that's very, very helpful for you to learn. And that's one of the things we can sit there and start help a lot of traders do with the iMTF technology. Okay. The biggest question I think a lot of people ask is, how much is this indicator? Believe it or not, we have a very, very cheap price here, and this is for 48 hours only right now, where we're basically launching this indicator for a 1-year subscription. It's only $99. And the way to get it is, if you go to this link here, it'll take you to the information in order to order it there. But this is basically for 48 hours, we're going to be offering this special promotion. I keep on putting the slash in. I'm just typing this in real fast. Where it's only $100 this year for this year. Okay. A couple of notes here. You do need the machine number. It needs to be provided in the order form in order for the license to be activated. Indicator. Remember, one of the things is that we are literally crunching 1 minute all the way to 1 month data for all the historical data and stuff like that. Okay, so it does take some time to load the data, especially if you're sitting there asking for 18 years worth of data when you pull up a chart. Okay, so take into consideration that when you pull up a chart, it's not going to load within a second or less. It will take some time for us to crunch the data and present it to you. Okay. You'll be able to see all the historical data and so forth. We do have installation videos where you guys will be able to see exactly how to install it and everything there. Okay, so this is pretty much the promotion that we're offering so this is a $100 a year promotion and so forth. Is there any questions? I think we're running out of time now, so if you guys do have any questions, feel free to email us. If you want to see more on charts, how it looks, you pretty much can sit there and look at this indicator and apply it to any market where you have a data feed for and any time frame that you want. Oh, there was a question, you saw red dots. I didn't get a chance to go through, but we do have what we call overextension dots. Those are represented in forms of small red dots, yellow dots, and black. The red basically means it's overextended short term. The yellow means it's overextended medium, and black means it's extended over extreme. So basically a rule of thumb is black, you basically get out completely. The yellow, you're basically going to lighten up your positions and tighten up your stop. The red basically will mean that since it's short term, go down to a low time frame and manage the trade. The question is there a trial period? For $99 a year, there's no trial period. I'm sorry. You guys can understand it took a lot of time and a lot of money to develop this indicator, and it's a lot of crunching that we do. So this is there's no trial period at all involved with this.
All right. I'm going to wait another minute. If any other final questions, please post them in the room, and then we'll get those answered, and then we will wrap this up.
Questions? What is the smallest time frame you could use this? You could go down to a tick level. You could go down to 1 minute, whatever you like to do. You just got to make sure your rules are all set up and so forth. The lower the time frame you go, you want the highest probability setup that you're always looking for crosses. So one of the things I tell day traders and scalpers is that if you're patient looking for high quality trades, then you're always wanting to trade where you have crosses on the lowest time frames, whether it be tick charts or minute charts and so forth, and go that route. How long is the promotion for? It's 48 hours. Does it work on options? Well, I mean, if you know how options work, you're basically, when you're a trend trader, you're looking at the charts. You're trading up the chart. So, you could, when you have the green shaded area gets to a breakout, you're going to be looking at the options, and the option strategy will be based on, the volatility and the Greeks and so forth. So yes, we use it every day for trading pretty much everything from U.S. stocks, currencies, and futures to Australian stocks, UK, and so forth. So we are diverse with our trading, where we trade pretty much every product around the world. If I use 2 machines to trade, license valid for sorry, but you guys got to understand, this is we gutted the price on this in order to basically make sure that everyone can sit there and use this. You will have to have this license for every machine that you have. And that's one of the reasons why we kept this price really cheap, and we did it a yearly out, so that everyone could sit there and test this over and over and over and use it and so forth. It does work on range charts and tick charts too, but remember, when you start working at range and tick charts, it's still looking at minute data on the back end to crunch everything there to find those multiple time frame levels. Because when you start going to range and tick and stuff, it can sit there and be a little variant. How do you define support resistance? I'm not quite sure what that means. Support resistance are major levels where a price can sit there, could stop and reverse, or it could stop and start major trends. Most people, as I mentioned, look at 1 time frame or 2 or 3, or they'll look at 1 or 2 indicators. What we're doing is we're finding where all the day traders, swing, and long-term traders are basically having the same levels, and when they have the same levels, that's when we show you those dots and crosses. So those are what we call multiple time frame support levels. This webinar is recorded. Jared, when do you think the recording, and how is the recording available, I guess?
Everyone in attendance should receive an email with the link to recording tomorrow or Monday at the latest.
Okay.
All right. I'm going to go ahead, and it looks like, I think I'm going to wrap this up. Looks like everyone's questions were answered. Please use the email address that is on screen to contact Manesh and his team. So I just want to give a special thank you to Manesh Patel from IchimokuTrade for his great presentation today. Just a reminder again that everyone in attendance will receive an on-demand recording of today's event within a couple of days. Please do keep an eye out for that. Just a heads up too that NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you will attend them on a regular basis. One final reminder that the information provided in this was that of IchimokuTrade and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. Please enjoy the rest of your day. We hope to see you again in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.
Thanks, Jared. Thanks, everyone.